Hello, everyone, and welcome to this week's podcast. Today is June the 12th, but we'll be releasing this on the 13th. But
Friday the 13th.
Friday the
Very
13th,
ominous.
right? Yeah, a little bit ominous. But I mean, even then, while that may be kind of ominous, it's been somewhat muted action, but positive for most of the indices, major U.S. equity indexes. We've seen international do a little bit better, but even then, there's nothing been in major moves. We've just kind of seen
Yeah.
steady as you go this week.
It's been quiet. I mean, we had a nice 3-day gain run for the S&P 500. I think it was from last Friday to Tuesday, which we broke with action yesterday as of Wednesday. But really nothing is really crazy. I mean, we're swinging in from around, up 0.5% to really, down 0.2%. It's nothing particularly crazy in the form that we're bouncing up back and down like we were on
Yeah,
Liberation Day, right?
right.
So
It's not like we're doing a percent here,
yeah,
or 1.5% here. It's sort of just ping, 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 ping. But
yeah.
hey, oftentimes these are the markets where we can really start to see a lot of things emerge and develop, even when it may seem like it's quiet. And
Right.
that's sort of what our theme, I feel like, is going to be through much of this podcast.
Oh
It's
yeah.
like, here's the little things we've been watching and that have ultimately had some or have had some impact this week, but we may have not seen it. Many
Right.
may have not seen it this
Yeah.
week because it seems quiet.
Yes. And for those of you who missed last week, or maybe you did watch last week, thanks for coming back. Thanks for coming back. Ian and I went through a new kind of theme or topic that we're going to be doing during these podcasts. That's going to be going through 5 charts. We'll use that term somewhat loosely, but 5 charts for the week, whether that be a PNF chart or just something interesting that came across our desk with market movement. So David and I have gone through, picked out a curated list of 5 great charts that we're going to take a look at today. And I guess we'll just get started with a relative strength chart between
Yep.
gold and silver. So you can take both of those GC backslash and SI backslash on the platform, throw them in, and look at a 3.25 scale here. That is going to be a relative comparing the two against each other, like a big arm wrestling contest. Now, just to set the stage, precious metals have been an area of strength within the commodities space.
Mhm.
Throughout really 2025 so far, 2024, of course, gold had quite a year as well. But we have seen a bit of consolidation for gold as it's kind of bumped into around those all-time highs, around 3,400 or so on its default chart. And we've seen some consolidation. Now, gold has slowed down. Silver has not quite as much. It's actually broken out to some decade level highs there. I don't have the chart in front of me, but it's actually broken out quite nicely. And that's led to some relative strength changes where we've seen a reversal back up in favor of silver in the near term. I'm rambling, but that's the
It's
the
setting the
idea. It
stage.
is setting the stage. Precious metals still relatively strong, but silver has picked up a little bit as well.
Well, as you're speaking to, is sort of that relative piece of precious metals in general.
Yeah.
That's really where commodities have just been led by, and that baton's been carried by precious metals for quite some time. So even seeing this kind of development where gold may not be the top dog is at least worth a lot of people paying attention to because, well, if in anything, you have another alternative you can look to.
Right. And this is all of the markings of a strong group. For instance, what you really don't want to see, I mean, it can get a little bit hairy thinking about or wrapping your head around relative strength in a commodity space. But, do the exact same thing from a sector perspective. You really don't just want one subsector of a group leading the market higher. You take a look at semiconductors with technology, right? It's unhealthy just for semiconductors to do well. You also want software to be doing well and hardware to be
Right.
doing well and services to be doing well. So you can take that exact same idea and just kind of stick it on over into commodities and precious metals in this case. It's unhealthy just for gold to be leading the way from a commodity precious metals perspective. You also want to see improvement from other areas of precious metals. That is the sign of a true leader. And that's what we're
Mhm.
seeing from precious metals in general here.
Now, we've talked about that leadership within commodities, but we did get a positive development out of a laggard in
Right.
commodities this week with yesterday's action. We actually saw crude on that CL forward slash chart, just showing that continuous commodity contract,
Right.
moving up to at least test its bearish resistance line. Didn't
Right.
break it, but test it.
Yeah, I mean, this has been just an absolutely, thrilling chart to watch. I mean, it's I'm such a nerd. So but we all are. But point being, crude has been a laggard for quite a while. Energy focused areas have certainly been such. We've seen it break through some relevant multi-year support on its default chart,
Mhm.
and then run into resistance around that old support, I think in the mid 60s or
And
so.
now and just this week, we finally poked above it.
Exactly.
That's
Yeah.
sort of the story that we're like, oh, well, okay. For the
Yeah.
past 3 months, we've watched it waffle between mid 60s, mid 50s, have one good day, and then subsequently fall apart the next.
Yeah.
And at least this time, there's some level of follow through. Now, is it to the point where we're saying, like, wait, if the evidence is positive for energy? No,
Right.
no. This is really just a first hurdle that we're finally seeing off of what's been low levels out of pretty major consolidation for at least the past few months.
Yeah, I mean, and you look at it and you say, like, even if you were to get that trend break, right? And again, you're looking at the
Hmm.
chart on screen right now, even if you get that trend break, the kind of grinding lower movement over the course of the last 52 weeks, there's still a lot of resistance baked in there.
Yeah, I mean, it seems like it's a mountain of resistance through
Yep,
the mid 80s there, especially when you look on this chart, just starting at 80 and then working your way up through the 80s. I mean,
right,
there's still quite a few hurdles for crude to sort of move across, and I'm not sure that really there's quite the catalyst there, at least presently, for that to happen. I think we're still kind of you're seeing mostly short-term moves out of it. You're
right.
not seeing that much of a long-term change, but
That's a good point.
it's something we're still going to keep watching.
Yeah, I mean, there's a lot of things in play when it comes to that stuff. You have fundamentals, you have global macroeconomic concerns, whether it be, yeah, whatever it is. But the technicals are in play as well here, and we talked about this before. It's about building the way to the evidence. Tom Dorsey used to say, play the piano with both hands, right? You master the fundamentals, you master the technicals,
Mhm.
using P&F charting to help define where there's buyers and sellers really camping out and battling, that can provide some more clarity to a sometimes cloudy fundamental picture or macroeconomic picture if you believe that global stuff can get confusing sometimes. So,
Well, but even then, looking at our economic picture just in this short period of time, we've gotten at least some near-term positives,
right,
lighter than expected inflation. Maybe haven't seen U.S. equities respond as positively as one might have thought. I think there's still a little bit of tepidness to even getting those lower inflation prints right now. It's just sort of there's still, I think broadly speaking, not only from the Fed's perspective, there's still a lot of wait and see.
right.
But we're at least starting to get with some of these major indices additional upside, and they're creeping closer to their all-time highs that we saw earlier this year or late last year.
Right. And Ian and I mentioned this last week. I'm certainly not, saying that we're right or anything like that. But we mentioned that, just throw it out there. But Ian and I mentioned this last week, like we want to see a little bit of a slowdown or some type of normalization. We really didn't just want to, have a 15-20% correction like we did in
And then
April
if
and then just
anything, almost
immediately get back up.
rebound,
Right.
right?
That's not a particularly healthy environment. These V-shaped corrections,
Mhm.
they leave us as chartists, they leave us without support, right? And we love to see close by support. So, seeing a little bit more of normalization over the last
Like a
week or
stair
so,
stepping in the charts, oftentimes
it
is
looks
what we're
great.
looking for.
Yeah.
Yeah.
But again, I mean, we've seen a bit of it's been a positive week, right? But it hasn't necessarily been just an immediate attack of those all-time highs, which I would say is probably a decent thing.
Mhm. Well, and looking at like a lot of charts, it's pretty interesting. You brought up XLG, this Invesco S&P 500 ETF, but there's creepy similarities to even just looking at the chart of the S&P 500 in terms of chart action. I mean, I know there's obvious correlations between
Yeah,
the two,
they're the
but
same. Yeah.
even then, you're looking at just the top 50 versus an additional basket of 450, and there's a lot of eerie similarities in terms of how they behaved and have rebounded. Even this week, we get that bullish catapult completion there, and now we're one box away from highs.
Right.
Pretty much the same thing we're seeing on the chart of the S&P 500.
Yeah, and I don't know. I mean, both of them are interesting. I think the 50-cent chart on this one is quite interesting too, because you
Mhm.
can see a stiff emergence of resistance ahead around like 5150. I think if
Mhm.
I'm flying a little bit blind here, but the idea is that what I think markets are gonna have to come to terms with is how strong is this resistance at all-time highs? And then ultimately, if we, slow down, well, how close do we kind of put base camp in? If we think about climbing Mount Everest here to get to those all-time highs, and we have to retreat back down the mountain a little bit, how close is base camp to those all-time highs in terms of
Right.
support?
Are we going back near April lows, or are we kind of falling back near prior resistance?
Right.
Really, that's
Right.
going to be a
The
big
latter,
part
of
of it.
course, being more constructive, the
Right.
former being a little bit more
Like,
concerning.
uh-oh.
Yeah, exactly. XLG, I mean, these guys are going to be, your biggest ones, your biggest stocks. There's been a lot in the news. We're not going to talk about it, but lots with Tesla over the course of the last few weeks.
Weeks, months.
You get Nvidia, you get all these guys have their own interesting technical and fundamental pictures that are certainly worth watching, and that all kind of comes to head with XLG, and of course, as does Nvidia, as does the big guys, the saying, at least for the last couple of years, is as goes those guys, so goes the rest of the market. So we'll have to see kind of how that shakes out.
Yeah, and we've talked a lot about US equities, commodities, but really where we've seen probably the most improvement, or at least a lot of more developments, if that's how you want to phrase it, is within the international space. May feel like we're beating a dead horse on
We
that,
are. Yeah.
but it kind of just keeps happening,
Yeah.
and that's the part of it is where every time we keep looking, it's like, oh, international's doing something else. And just this week, we had that iShares MSCI EFA ETF move to a new all-time high. EEM moves to a 52-week high, clearing some more resistance from October of last year. So again, it feels like we're just regurgitating something we've already talked about. But again, it's just like it keeps knocking down hurdles and keeps improving. And
Yeah, and that's, we talked about gold and silver leadership, kind of showing, hey, precious metals are strong. We've been talking heavily about developed markets, emerging markets. You look at EEM, right? That you like you mentioned, moving to new 52-week highs. That's been an area that has kind of, it's advanced nicely, but it hasn't done so as much as developed markets. Now we're starting to see a little bit more of a pickup out of emerging markets as well. Again, really just falls under the same umbrella of international excellence so far in 2025. Area has really just continued to flex its muscles.
yeah, in the daily equity report, just a quick shout out. We did put a list. I won't talk about the individual countries, but we put a list together of ETFs, country related ETFs that are trading at either all-time highs or at 52-week highs. That's in Tuesday's report. So be sure to go check it out. I won't
Yeah.
belabor any more of that,
Well, and,
but
and Ian and I talked about it last week, and the only reason why the dollar is not a featured chart this week was because it was one last week as well. But we did see the US dollar move to new, kind of fresh 2025 lows. At this point, goes without saying, weaker dollar is going to be a tailwind for international equities as kind of products and goods and services get relatively cheaper there as well on the international front. So as long as we just continue to see the dollar churn lower, that's going to be a continued tailwind for international
when
equities.
going back to sort of when we were talking to commodities earlier, we had narrow leadership in precious metals within international right now. That is not the case. I
Right.
mean, they're in terms of even looking at this list of country ETFs that have made highs, it's not like at this point it's just Europe that's
Right.
doing it.
Yeah.
That's where we're, I guess, where we're kind of leading to is that like there's more involved now. So
But the spread between international, and we're getting off topic now, but momentum is still strong, right? So that's an interesting point because, typically speaking, when everything is doing well, that's actually a somewhat
can
difficult.
be,
Yeah,
yeah,
it
it can
can
be
be a
difficult for
difficult for
momentum to
momentum
deal
because
with.
it's like, well, hell, everyone's doing well.
Who do
So
I
like, who
pick?
do I pick,
Yeah.
right? But you look at international momentum, and it's still relatively strong, which would give credence to the idea that the spread is relatively high. And maybe that just speaks to the idea that, well, everyone's doing well, but the winners are doing really well, and the
Right.
laggards are doing just a little bit well.
They're kind of okay.
But
But
everyone's
yeah.
still doing well, right?
Mhm.
So that's definitely going to be something to watch, especially as that breadth does broaden out on the international front. How does momentum do?
Well, and I think as we see sort of the tariff conversation develop out, we could see some of even that international leadership shake up as well. I mean, so that's what we'll continue to watch just because it seems like it's an ever moving picture on a weekly
Sure. Yeah,
basis.
of course. So on a daily basis,
Yeah.
minutely basis, secondly
Yeah.
basis.
Our I think our last chart we're going to cover is going to be related to rates. We did mention earlier that we saw lower than expected CPI print, PPI print, sort of giving us, okay, maybe this is the sign the Fed was looking for.
Right.
Last week, prior to seeing these prints, we did see the U.S. Treasury 10-year yield index on its point and figure chart reverse higher up to about 4.5%. We've since it's steadily decreased since then, but it's sort of been in a waffling, just moving back and forth, buy signal, sell signal, kind of trading around as, again, this has very much been a wait and see, but it feels like this week maybe that helps some of the evidence. And we saw a pretty notable increase, at least potential rate cut expectations.
Right. Yeah, we've seen rate cut expectations, but I mean, in terms of the back and forth action, I mean, like you said, you've got the inflation concerns might be coming down. Then you have like debt increases, right?
Mhm.
Those are going to push rates higher. So it's a little bit more of
Right, got the
a
Treasury auction today.
yeah. We'll have to see how that goes.
Yeah,
But there are it's a tug of war game, right? And of course the longer term is going to be debt concerns and things like that. That's not just going to show up on the 10-year, right? That's going to be
right.
across the curve. But the idea is that, what if we can see a decrease in inflation expectations, maybe there's a little bit more room to or actual inflation that is, maybe there's a little bit more room to, cut rates going forward rather than being kind of pigeonholed,
Just
having to
staying
keep it high.
right now.
So
Yeah,
we'll see.
fingers crossed.
Yeah. But yeah, like you mentioned, rate cut expectations are, on the
Now I
rise.
think in the mid 70s for maybe a cut in September is
Right.
what we were here
Um,
talking about this morning.
so we'll see. I mean, of course, and then that's going to have impacts across markets, across commodities, across the US dollar, right, across fixed income, obviously, and things like that. So certainly a lot to watch out for. Do we have anything big over the next week that we should be watching out for? I think earnings season's kind of wrapped up and everything like that.
At least the Q1 earnings season's wrapped up. We're getting ready to wrap around Q2. It's
Just
not
getting
far
going
from
again.
it.
Never ending. All right. Well, speaking of never ending, the podcast, we're droning on a little bit. So I appreciate you all's time this afternoon, this morning, whenever you're listening. I hope everyone has a wonderful day, and we will be back again next week to touch on any market action as it occurs. Thanks.